Welcome to my fifth lecture on economy. Today we're going to be studying about banking. Okay. Now I want your undivided attention over here because there is going to be a lot of facts in this chapter. So take a pen or something and keep writing whatever I say. Okay. Let's start. Now, what is financial intermediaries? Now, when we say banks, banks means they are called financial intermediaries. What is the meaning of financial intermediaries? They are middlemen who facilitate financial transactions between two people. Who are those two people? It can be lender and borrower, or investor and entrepreneur, or household and business firms. Between these two entities, they will act as middlemen. They are called as financial intermediaries. Okay. Now there are two types of financial intermediaries: formal and informal. Under formal, there will come banks and non-banks. Banks and non-banks. Now under banks, there are two types: commercial banks and cooperative banks. Under commercial bank, there is public commercial bank, private commercial bank, foreign commercial bank, and then differential banks. Differential bank there are again four types: regional rural bank, local area bank, small finance banks, and then payment banks. Okay. And under cooperative banks, there are different types like urban cooperative bank, state cooperative bank, central cooperative bank, primary agriculture credit societies. We'll study about all of them. Okay. Then there are non-banks. Under non-banks, there are like All India Financial Institutions, AIFI. Under that, there are four types: EXIM. Actually, there's one more. It's called NABFID. We'll study about all this. First one is EXIM, Export Import Bank of India. Then NABARD, National Bank for Agriculture and Rural Development. Okay. Then National Housing Bank. Then SIDBI, the Small Industries and Development Bank of India. Then NABFID. We'll see full form later. Then primary dealers. Okay. We'll learn about all this. Let's just see the names for now. And then NBFCs, then pension fund, mutual fund, insurance fund, mudra. All these are considered as non-banks. Okay, these are all formal types of financial intermediaries, banks and non-banks. Now, informal types are like in the village level, you'll find money lenders, those type which are not monitored by the RBI central bank. So those type of intermediaries are called informal financial intermediaries. Okay, now we will study about banks. Now, before studying about banks, we will study about RBI, because RBI is a regulator of all the banks. So we need to know about the genesis of RBI, how it came about. Now, in 1913, commercial banks was registered under the Companies Act. Okay, there were commercial banks and they were required to get registered in the Companies Act. But what happened was, the problem was the monitoring of these commercial banks. It was lax. Lax means it was not done properly. There were no CRR norms, no SLR norms for these banks. So they, in a case of crisis, they don't know how to respond. Right? So they are very vulnerable here. So in 1926, the Britishers appointed Hilton Young Commission, to set up the central bank in India, called Reserve Bank of India. Finally, in 1934, RBI Act was enacted. In 1935, RBI became operational. Okay. Then who was the first RBI governor? Osborne Smith. And at that point of time, who was the viceroy? Willingdon. Right. Now, during 1935, what was the ownership here? Government ownership was just 4.4%, whereas the remaining was held by private ownership. So you can say RBI is a private body now in 1935. Okay. Now under RBI Act, under that there is a schedule, second schedule. Now in the second schedule there are two conditions. Okay. If those two conditions are fulfilled, then that type of commercial bank or a private bank can become a scheduled bank. Okay. If they become a scheduled bank, they will get some benefits. Okay, like it becomes more trusted. The governments, the people, they like to open their accounts in this scheduled bank because the money will not get defaulted in this case. people trust more here, and whatever government gives money through schemes, all that subsidy and all that, Jan Dhan accounts, all that will be facilitated through scheduled banks. Okay, and scheduled bank has to keep CRR with the RBI. Some extra norms will be prescribed on them. Next, in 1943, C.D. Deshmukh, who was the second finance minister of India, became the first RBI governor. Okay, then 1948, all the shares, now it was private body, no? So all the shares was transferred to Government of India. So using this act, RBI Transfer of Ownership Act. So RBI is now answerable to the Parliament now. Okay, because government has all the shares now. And RBI also has to pay dividends to the government from whatever the profits they earn. Okay, then now since it is under the government, it is also behaving like a public entity, which means it is under the ambit of RBI Act, RTI Act. Okay. Now 1949 में Banking Regulation Act was enacted. Now why this act got enacted? Now see till here, no, RBI was just formed. Okay, but there was no real powers given to RBI to control the banks. So in order to control the banks, this Banking Regulation Act was being made. So this empowered RBI to have more control over the banks, made RBI more powerful. So what kind of power it got? It gave power to give license to companies to open banks. This kind of power was given to RBI. Then give permission to banks to open new branches. Then prescribe the SLR norms. Then force merger or elimination of weak banks. Then protect the interest of depositors. All these are the powers given to RBI with the help of this act. Okay, when did this act come? 1949 May. You have to remember the years. Okay, they can ask chronology in MCQ. Arrange the following in the chronological order. They can ask Banking Regulation Act. They can ask when RBI was formed. 1935 made operationalized, enacted in 1934. Okay. Oh. Fine. Now RBI ka composition. There are non-official directors and official directors. Under non-official directors, 2 government officials will be there. Okay, and 10 directors who are nominated by the Government of India. Apart from that, 4 directors from the RBI boards. These boards are of in the 4 regional locations: North, East, South and West. North, South, East, West. Then official directors, they take care day-to-day activities. It is their responsible, official directors. Under official directors, there is RBI governor. Okay, who's the present RBI governor? Sanjay Malhotra. Before he's the 26th RBI governor. Before him, who was the 25th? Shaktikanta Das. Okay, then 4 deputy governor is also there as the official directors. No, this 4 is it should not be more than 4 because it's mentioned under the RBI Act. Okay, and whatever tenure is there, no, of this RBI governor and deputy governor, it will be usually 3 years. Usually 3 years, not compulsorily 3 years. Okay, then reappointment is possible for them. And how are they selected? They're selected by this committee called Financial Sector Regulatory Appointment Search Committee. Okay, FSR ASC. And this committee, search committee, they send the recommendations to Appointments Committee of the Cabinet, which is headed by Prime Minister. Now, Prime Minister, this is a Cabinet committee. You have to tell me, I give you the one homework. There are Cabinet committees, How many of them are headed by the Prime Minister? You have to tell me those names of the Cabinet committees. One such is Appointments Committee. You tell me the rest. Now, RBI office. RBI offices are there in 4 places: Delhi, Mumbai, Kolkata and Chennai. Under RBI office, there are different departments. Each department has a specific role, like banks. It will handle one separate department for banks, one separate department for NBFC, for payment systems, for foreign exchange. Different departments are there. What are the functions of RBI? It will issue, it is the issues money supply, right? It prints money. Then it also acts as a regulator of foreign exchange. Then it acts as a banker to the government, to the bank, and it also acts as a public debt manager. Okay, a banker to the bank in the sense it acts as a lender of last resort. Okay, last resort means if bank is not able to get any money from the public, then they can go to RBI for getting the money through certain RBI windows like repo rate, a marginal standing facility, reverse repo rate. Okay. And what is public debt manager? Let's say if the government wants to sell government securities to the public or to the banks, then government will tell RBI that you go sell this government securities for instead of me, okay, on behalf of me. So that it is acting as a public debt manager. Okay. Then regulator of all the banks. Okay. Another function is regulator of all India financial institutions and non-banking financial companies which are deposit taking. This D means NBFCs are taking the deposits. We'll study about this later. Okay. Then international corporations. Okay, like all the Basel norms and IMF recommendations and all they follow. Then RBI, recently, this is a current affair. RBI joined Network for Greening the Financial System, NGFS, in 2017. This was formed in 2017. It recently joined it. What does this NGFS do? It is a group of central banks for development of the environment. They focus on developing the environment. Headquarters in Paris. Fine. This is just current affairs. I'm just giving you some extra information here. Then promotional roles. Ombudsman. Okay, RBI appoints an ombudsman. What is an ombudsman? The term ombudsman is derived from Sweden. Okay, ombudsman is someone who listens to complaints from the people. He's an government official, okay, who listens to complaints from the public regarding any services provided by RBI. Then financial inclusion also it also prescribes. For example, banks, it can prescribe that banks has to open 25% of their branches in villages. Okay, then banks have to adhere to the PSL norms. PSL norms, priority sector norms. There are some sectors which the banks have to give their have to separate their loans, dedicatedly give them to these priority sectors. I will tell about this in the next lecture. Monetary policy में आएगा ये. Okay, then data. They will also publish some data like annual financial stability report. Okay, so these are the functions of RBI. Now, what are agency banks? Now, what this RBI was doing was it acted as a bank to the government. No, so what it does, it did tax money collection, salary and pension distribution for government employees, small savings, whatever is there. All this was done by RBI till now. Okay, tax money collection is actually done by income tax officers. Okay, but whatever banking from taxpayer bank account to government bank account, this facilitation, this transaction is facilitated by RBI. Yeah, all this before RBI was doing. So a lot of headache for RBI. RBI can't do this alone. So what is the solution? RBI appoints agency banks like Axis Bank or Bank of Baroda. Axis Bank is a private bank. Bank of Baroda is a public sector bank. Okay, so they will do this work. All this tax money collection, salary, pension distribution, small savings schemes and all that. On behalf of RBI, they will do this. It's called as agency banks. Okay. Now, there are some portals which RBI opened. For example, Udgam portal. Udgam stands for Unclaimed Deposits Gateway to Access Information. Why this portal is opened? Like for example, deposits, let's say fixed deposits. Okay, they are unclaimed. They have matured, and after 10 years also, it is unclaimed. Okay, then what the bankers will do? The banks will transfer this unclaimed deposits to a fund called Depositor Education Awareness Fund. Okay, this fund is with the RBI. They will transfer all these unclaimed deposits into this fund. Now, what the beneficiaries do? They can easily search this. It will help them search all these unclaimed funds, and they can retrieve them. Okay, this is what this portal does. Then Prava portal. It is a platform for regulatory application, validation, authorization. Here, bank, NBFC, and digital payment companies can obtain license from RBI. Okay, if anybody wants to open a bank or NBFC or digital payment companies, they have to obtain license, no? So that is provided from here, Prava portal. Then Daksh web portal. This is for supervision. Okay, banks and NBFCs have to send reports to the RBI for supervision. Okay. Then eKuber portal. Remember this core banking solution which I told you last time? So this is a type of core banking solution of the RBI. Here, no, all the banks have to open their accounts in this eKuber portal. Okay, I told you in the last class that NEFT RTGS. I didn't tell you about this open market operation repo and all. I'll tell you about this in the next lecture. But NEFT RTGS I told you. So all this is done using the eKuber portal. Then government securities, if they want to issue, it is also done by this portal. In this eKuber portal, no, even the retail investors like you and me, we can also buy government securities, but we have to open a specific account in that. It's called gilt account or something. Then, yeah, I was telling, no, if those two conditions are satisfied, what is the benefit of the scheduled bank? I'll come to this, but first we'll discuss this one. Okay, now say a bank, okay, which is a public or a private bank, okay, if it fulfills these two conditions in the second schedule of the RBI Act, then it can become a scheduled bank. What are those two conditions? Paid up capital should be 5 lakhs and bank should not conduct any business harmful to the depositors. Now, what do you mean by paid up capital? Let's take a glass of water. Okay, now this glass of water is half filled. Okay, it can be filled till how much it can be filled? Till the brim. So how much ever it can be filled, like till the brim, that is the authorized capital. Okay, which means it can issue shares up to this much amount. It is permitted to issue that much amount of shares. But what actually they distributed, like the issued shares, is this amount. That is the paid up capital. The analogy over here is this water, whatever this water is there, no, it is half filled. So that is the paid up capital. If it becomes full, then it will become the maximum authorized capital. Maximum paid up capital is nothing but authorized capital. Okay, here what is the paid up capital? 5 lakhs. Okay, and bank should not conduct business harmful to depositors. If these two conditions are simultaneously fulfilled, then they can become scheduled bank. Now this is under the discretion of RBI. Okay, RBI will monitor once in maybe 1 year, 2 year, 3 year, like that. They will keep on seeing this bank whether they're performing well or not. Okay, now what is the step 1? Let's say you want to open a bank. You want to open a scheduled bank, let's say. First, you'll open a company. You'll register that company in the Companies Act. Then you'll acquire capital via shares and bonds. Okay. Then you'll get a banking license from RBI. Okay. From where you'll get from Prava portal. Okay. Now to get this license also, you need some conditions to be fulfilled. First, you need to have 500 crore capital. Okay. Then you need to have 10 years experience in any financial background. Okay. Simply you cannot go and apply a banking license. You need to have these two conditions fulfilled. And after that, that second schedule in the RBI Act, that is a minimum 5 lakh paid up capital and protect depositors. If these two conditions are fulfilled, then you will be classified as scheduled bank. Okay, otherwise, you will be considered as non-scheduled bank. Now, what are the benefits of making it into a scheduled bank? Access to RBI windows, all that repo rate, reverse repo rate, marginal standing facility, standing deposit facility, all that you'll get access to. And it is more trusted by the government and private companies. Okay, employees like to deposit their salaries and all into the scheduled bank. Then whatever government schemes are there, if the government wants to deliver the schemes like Pradhan Mantri Jan Dhan Yojana and all that, they can do using scheduled banks. Okay, more trusted, that's all. Now, what is the difference between scheduled bank and non-scheduled bank? In scheduled bank also there is commercial bank and cooperative bank. Non-scheduled also there are two types, commercial and cooperative. Now scheduled bank mein CRR should be deposited in RBI, whereas in non-scheduled bank it has to be kept with themselves. Okay. scheduled bank, they're eligible for borrowing or depositing in RBI. That is whatever that repo rate, marginal standing facility, standing deposit facility, and all that. They're eligible. But in non-scheduled bank, there it is at the RBI's discretion. Third one, they have to protect the depositors, whatever money they have deposited. They have to protect that. Here also they have to protect. Otherwise, they'll be removed as a bank only. Penalty will be imposed and license will be cancelled and all that. Then here, government and private likely to open account over here. Here they are less likely to open. Then here banks become eligible partner for in government's financial inclusion schemes, like all that Pradhan Mantri Jan Dhan Yojana and all that. So banks become eligible. Here they don't become eligible. Okay, this is the difference between scheduled and non-scheduled banks. Now I told you about this. This one. Banks are divided into commercial, cooperative, public, private, all that. We will discuss one by one: public, private, foreign, differential. One by one we'll discuss. Okay. First we'll start with public sector bank. Now, public sector banks, we'll see how it came about. In 1948, this happened. All the private shares got transferred into government using this act. Okay. Then this is some extra information. No need to know all this. Just this is just extra information. No need to give more emphasis on it. 1948 में Operation Polo, Hyderabad was the next. 1951 में first financial year planning. Then 1953 में Air India got nationalized from Tata. Okay, why I'm telling all this? Because they might ask chronology in the prelims exam. Arrange the following in the chronology. So just have to know the dates. Then 1955 में Imperial Bank got nationalized and became State Bank of India. Okay, Imperial Bank became State Bank of India after nationalizing. 1955, LIC took over private life insurance companies. 1957, first communist government in Kerala. 61 में Operation Vijay for liberation of Goa, Daman and Diu and all that. And 1963 में State Bank of Jaipur and Bikaner merged together. You do one thing, you take a paper and a pen, keep on writing all this, just scribble it, okay. Then 1969, banking companies acquisition and transfer of undertakings ordinance. Okay, yeah, this 1969, you have to remember this date. Okay, this is this one date and this is one date. This is important. Here, first round of nationalization of banks happened by Indira Gandhi. First round of national. Here, 14 private banks got nationalized. What are these 14 private banks? If they have more than 50 crore cap deposits, okay, then those private banks was nationalized. For example, Bank of Baroda, Punjab National Bank, Dena Bank, Canara Bank, all these were nationalized. But however, this Catholic Syrian Bank, Ratnakar Bank, Dhanlakshmi Bank, they did not have this much deposits, 50 crore deposits. So they were not nationalized. So that's why they are called as old private banks. Okay, these are called national banks. These are called old private banks. 1972, what is this? GIC Act took over private non-life insurance companies. Non-life insurance means general insurance company. Fine, all this is not important. 1980 में 6 banks harm. This is first nationalization. 1980 में second nationalization happened. Nationalization of banks. Here 14 banks got nationalized. Here 6 banks got nationalized. 6 banks of 200 crores worth of deposits. 200 crore or more. They were nationalized. For example, Corporation Bank, Vijaya Bank, Oriental Bank of Commerce. Okay. Then 2019 में that state Jammu and Kashmir got statehood was repealed. It was turned into union territory. So state government of Jammu and Kashmir, which owned 60% of the shares of the Jammu Kashmir Bank, after Article 370 removal, union government took over the entire shareholding. Then reform committee, some important reform committees were like M. Narasimhan Committee. Then he is like known as the father of banking sector reforms. M. Narasimhan. He is also the RBI governor who served the longest. 12 years he served. Okay, so in 1991 he gave the first banking sector reforms. In 1997 he gave the second banking sector reforms. He held that committee. He was the chairman of that committee. Then Dr. Raghuram Rajan Committee, then PJ Nayak Committee. It can come in prelims, like the following committees are related with what? You have to tell banking sector reforms. Then death. This Narasimhan, M. Narasimhan, he died in 2021, so we have to know a little bit about him. He was the ex-governor of RBI, chairman of various committees on the banking sector reforms, also known as father of Indian banking sector, banking system reforms. Okay. Now public sector banks. they had to be consolidated either through merger or privatization. What was the need for consolidation? Like some public sector banks did not perform well. Okay, like there were inefficiencies in it, so they had to be either merged or they had to be privatized. Okay, for example, this BMB is Bharatiya Mahila Bank. Okay, Bharatiya Mahila Bank got merged with 5 associated banks of SBI. What are those 5 associated banks? Bikaner and Jaipur, and then it's like State Bank of Bikaner and Jaipur, State Bank of Hyderabad, State Bank of Mysore, State Bank of Patiala. So these 5 associated banks got merged with Bharatiya Mahila Bank, and together they amalgamated into SBI. Okay, and then Dena Bank and Vijaya Bank got merged into Bank of Baroda. What are the benefits of this merging? Whatever duplicate branches are there, that will get closed down. Okay, whatever ATMs are there, servers are there, that all that will get closed down, and the costs will reduce. Okay, and thus increasing the profits. So this is the benefits of merging. Now privatization, another method of consolidation. Like for example, UTI Bank, which was a private bank, which was a public bank, public sector bank, got converted into private bank. Like it became Axis Bank. Okay. Now what is this? 2013 May, this Bharatiya Mahila Bank was set up. Okay, which I discussed here. BMB, set up as a public sector bank, headquarters in Delhi, and 100% ownership is by the union government. Okay. Then what did this Bharatiya Mahila Bank do? It gave credit and skill development to women only. Okay, it gave financial literacy to women. It gave more loans to women. Doesn't mean it doesn't give loans to man also. It gives loans to man, but predominantly to women. Okay, then BMB board of directors were all women. Then staff and depositors, both men and women there, and loans were predominantly given to women, and without collaterals that too. Okay. Then 2017 May, this got merged. The BMB and 5 associated banks I told you in that flowchart got merged with SBI. In 2017, alternative mechanism panel set up under Finance Ministry's chairmanship. This panel examines the proposals for merger and consolidation of public sector banks and forward it to the cabinet for approval. Okay, whatever merger and consolidation is needed, this panel will examine, okay, and give it to the cabinet. Then Department of Financial Services coordinates this file work. Now, before I told you in Banking Regulation Act that RBI will facilitate all the merger and consolidation of the banks. Remember, in Banking Regulation Act. But here this panel is doing it. So what is this? Why? Because RBI is not part of it, because majority of the shareholder was with the government. Okay, you can see in this Bharatiya Mahila Bank, 100% owned by union government, and all the public sector banks also. They are majorly held by government. Right? They were nationalized, no? So that's why RBI was not part of it. However, RBI can merge them through Banking Regulation Act. RBI is the ultimate regulator. Okay. Here just RBI did not participate. Some panel was being made. Then 2019, Vijay and Dena was to be merged into Bank of Baroda. Among these three, which is the oldest? Bank of Baroda is oldest, then Vijaya Bank, then Dena Bank. 1908, 1931 and 1938. Okay, chronology is important. This is not important. If you're preparing for banking exam, then only it's important. Otherwise, no need. Next, what is this? Amalgamating banks and anchor banks. Amalgamating banks. Amalgamating means which is combining, joining together. Okay. For example, Oriental Bank of Commerce, which is there in Gurugram, Haryana, and United Bank of India, which is there in Kolkata. These two got amalgamated, got merged into Punjab National Bank. Okay, Punjab National Bank headquarters in Delhi. It will become the second largest bank after SBI in terms of business size and branch network. Okay, like similarly, then Syndicate Bank, which is in Karnataka, that got amalgamated into Canara Bank. Okay, whatever it is getting amalgamated into, that is known as anchor bank. Okay. Then Andhra Bank and Corporation Bank amalgamated into Union Bank, Allahabad into Indian Bank. All this is not important to remember, okay? I'm just telling you what do you mean by amalgamating bank and anchor bank. What is the benefit of this? geographical and technological synergies will happen in the ATMs and branches, and security, staff, server costs and all that will come down. Okay. Now, totally how many are there? Public sector banks. There are 12 public sector banks and 1 India Post Payment Banks. All these are public sectors now. Okay. There's one more, IDBI. IDBI stands for Industrial Development Bank of India. This one, no, actually initially it was a private bank. Sorry, initially it was a private bank, but later on government entity, government like LIC bought the shares of the IDBI. So LIC, which is a government entity, so automatically IDBI should become a public sector bank. But RBI told that no, it will be a private sector bank according to RBI. So this is just an exception. If they ask in an exam, IDBI is private sector or public sector, you have to tell it is private sector. Okay, now we finished public sector bank. Now we will go to the next type, which is private sector bank. Now, what was the need to bring about private sector bank? What are the benefits of bringing a private sector bank? They have less NPA. NPA means non-performing assets. Means whatever loans gets defaulted, that will happen less here in case of private banks. Okay, and bank frauds, that will be less. Return on equity is good, and it also promotes innovation. This is the most important thing. Promotes innovation. Okay, let me tell you a history about this. In 90s and 80s, 1980s and 1990s, ministers and businessmen formed Nexus. It's called crony capitalism. So here, there were loan scams. There were inefficiencies in the banks, public sector banks. There were bad loans. There were hartals. Hartals means strikes. Then there was also losses. So because of all this, politicization of public sector banks happened. Okay. So due to this, there was apathy in public sector banks. There was apathy towards technology. They used to give populistic loans, populistic loan interest rates. Okay, to win votes and all that. Then political interference was there. So low loan recovery. Then employees union was being formed, so it hampers the innovation. Always conducting strikes and all that. So hampers innovation. Then balance of payment crisis happened in 1991, and they couldn't handle this crisis. So that's why there was a need to bring about private sector banks. So government allowed private sector banks and foreign banks. Okay, and also government was told to reduce the government control over public sector banks. All these recommendations was given by this Narasimhan committee. He gave the recommendations, banking sector reforms. He was the father of banking sector reforms. So what did he recommend? He told that decrease the shareholding of government in public sector banks, decrease the CRR and SLR. Okay, all this I will tell you in the next lecture. For now, you just know that these are the recommendations. Then before the public sector banks, the interest rates which they have to give, loan interest rates, that was fixed by government, but now it recommended that government should not fix the interest rates. Then liberalize the bank expansion. Then allow private banks and foreign banks into the Indian economy. That is what Narasimhan committee gave as the recommendations. So after this recommendation, the government held 3 rounds of bank licensing. Okay, round 1 में क्या हुआ? ICICI, HDFC, all these banks got licensed. Okay, this UTI bank, which was public sector bank, became Axis Bank, private bank now. IDBI, now owned by LIC. Okay, however, this LIC is a public sector entity, but still IDBI is considered as a private bank. Okay, I told you before, no? This is an exception. Then Global Trust Bank and all that. Fine. We don't have to remember all this. Just remember that 3 rounds of licensing happened. Then second round happened, and also remember that year also, 1993 to 1995. Then second round happened from 2001 to 2004. Kotak Mahindra, Yes Bank, all these were formed. Now, okay, what happened? Now, suppose if a scam happens in this private sector bank, it doesn't mean that we have to stop giving licenses to these private banks. Instead, we should increase the supervision and also increase the penalty for them. Okay, not stop giving licenses. Next, round 3 happened. Rajan means Raghuram Rajan invited applications, and then Bimal Jalal committee. All these committees you have to remember. Okay, Raghuram Rajan committee, Bimal Jalal committee. They made the selections. Bandhan, which is a microfinance company based in West Bengal. Okay, they also got license. Then IDFC, an infrastructure finance NBFC based in Maharashtra. Later on, another NBFC, Capital First, merged, so renamed as IDFC First. Okay, all this is not important. Just IDFC and Bandhan. Okay, the above banks are also known as new generation private banks. Okay. Now, licensing, no, bank has to get license. How can they get this license? What is the method here? This method is called on-tap licensing. Okay. To open private sector banks, they have to get this license. This licensing is given under this act, Banking Regulation Act. Now let's say Ratan Tata wants to open a bank, so he wants license. Okay, so what is the criteria? First of all, he has to have 500 crore capital and 10-year experience. Okay, after he has this experience, he'll get license from RBI. Now that bank will be termed as non-scheduled bank. Now, in order to convert to scheduled bank, 2 conditions have to be fulfilled. No, 5 lakh capital and protect the depositors. Okay, not doing any harmful business or something like that. Then it will become a scheduled bank. Okay, so this license, okay, before 2016, one had to wait for RBI to invite applications for applying for this license. They had to wait here. But after 2016, any person can, like any private bank can apply for license to the RBI whenever he wants, provided he meets the criteria, these 2 criteria, 500 crore and 10-year capital. Whenever he wants, he can go to RBI and get the license. That is called on-tap licensing. Okay. Next, foreign banks. We finished public sector banks, we finished private sector banks. Now we are going to study about foreign banks. Okay, this foreign banks is, let's see how it is, how it's going here. Foreign Bank of India, they are incorporated abroad, registered under Companies Act of that foreign nation. Okay, and opening branch or subsidiary in India, for example, Citibank, Bank of America, HSBC. All these are foreign banks. Okay, they are coming from outside and setting up in India. Are the CRR and SLR norms applicable on them? Yes, they are applicable. But PSL norms are there, no? Priority sector lending norms. They vary depending on the number of branches. And RBI also gives them on-tap licensing on a reciprocal basis. That means, for example, if the foreign nation allows Indian banks to operate in their country, then RBI allows that nation's bank to operate in India. You can see this picture, like if the US bank, they allow Indian banks to open offices in US, then only we'll allow USA banks to open offices in India. Okay, if they don't allow, like for example North Korea, they don't allow Indian banks to open in their country, so we'll also not allow them to open their banks in our country. So it is done on a reciprocal basis, on tap licensing. Next, Indian public sector bank. Foreigners can invest max 20% in its shareholding. Okay, for example, Bank of Baroda may 15% is of the foreign investors. Okay, SBI may 14%, Punjab National Bank may 13%. So maximum this much they can invest, foreigners, in these type of banks, public sector banks. What about private sector banks? How much they can invest in that? Foreigners can invest 49% through automatic route, okay, and up to 74% by the approval of the government. For example, HDFC may 73% is held by foreigners. Then ICICI may 59%, Axis may 52%. They are owned by foreigners. Although government thinking of increasing this to 100% because it will help more capital mobilization for the Basel III norms. Basel III norms I will tell in the next lecture. It comes under NPAs and all that. So I will tell in the next lecture. just know that it is a type of mechanism to act as a buffer for the bank in case of crisis. It acts as a buffer, like it has some norms which the bank has to prescribe to in order to safeguard the depositors' money. Okay. Now differential banks. Differential banks, for example, like Airtel payment banks, Paytm payment banks. This has to come into your mind when differential banks come. No, think of a Paytm bank, Airtel bank, India Post payment banks. Okay, now what is the difference between universal bank and differential bank? Universal bank means like SBI, ICICI, they can open branches anywhere, but 25% of their branches should be opened in unbanked rural areas. Whereas differential bank, no, they have some geographical restrictions. For this local area bank and regional rural bank, they have to open in a specific geographical location so that financial inclusion is facilitated. Okay, then universal bank, time deposits and demand deposits, both they can accept. And differential bank, they can accept max 1 lakh deposit, that too not max 1 lakh, now it has become 2 lakh in 2021, it got updated. Okay, these deposits are of demand deposits, not time deposits. Okay, only demand deposits. Then universal bank can give loans to anyone. Okay, whatever loans is there, first they have to allocate 40% of that to priority sectors, then remaining loans they can give to anyone. Similarly, this small finance bank and rural regional rural bank, 75% of that should be given to priority sector, and then remaining they can give to rural areas. Then payment banks can't give loans. Payment banks, you can think of Paytm, PhonePe and all that. They can't give loans, payment banks. However, you will see that Paytm can give credit cards and all. Credit card is a type of loan, no? So here, no, what it's doing is it is not actually Paytm which is giving credit card. Paytm is acting like a agency of some other bank to give credit card. Some other bank is there called Indus Ind or something. Okay, this bank, from this bank, Paytm is it is acting like an agency to this bank to give loans to the people in the form of credit cards. It is not, payment banks are prohibited from giving loans. Okay. Then what we will study, this one, we need to know the chronology of this regional rural bank, local area bank, small finance bank and payment banks. So regional rural bank came about in 1976. Local area bank came in 1996. Small finance banks and payment banks was very recent, like 2015 only. This is for financial inclusion it came. Okay, we need to know this dates. Then we'll see the difference between regional rural banks and local area banks. Regional rural banks, they are based on M. Narasimhan Committee, okay, on financial inclusion in 1970s, set up under the provisions of RRB Act. It was RRB Act. Okay. Next, for example, this Uttar Bihar Gramin Bank. Okay, this is a regional rural bank set up under the sponsorship of the sponsor bank. What's the sponsor bank? Central Bank of India. Sponsor bank means what? Sponsor banks are very big banks, like for example Punjab National Bank, Bank of Baroda, SBI. They help in lending money. They also help in training the staff, and they provide core banking solutions. So in a way, they're providing sponsorship to these regional rural banks. Right. So here, what is a sponsor bank? Central Bank of India, which is sponsoring Uttar Bihar Gramin Bank. Yeah. They are subjected to CRR and SLR norms by RBI, but they can prescribe, RBI can prescribe separate norms for them. PSL is how much? 75%. Okay, their loan interest rates can't be more than the prevailing lending rates of cooperative banks in that area. Whatever cooperative banks are there, their lending rates cannot be more than this cooperative banks. Okay. Then it is restricted to few districts, regional rural banks. Example, Baroda Gramin Bank, confined to only Gujarat. Okay, then we will see local area bank. It is based on 1996 budget by finance minister of that time, Manmohan Singh. Okay, then unlike RRBs, they are not set up by union or state governments or by any special act of the parliament, but by private entities. Okay, this is important. They are set up by private entities. Local area bank is set up by private entities simply by applying to RBI under Banking Regulation Act. They can open branches in maximum 3 districts sharing border with each other. Like for example, this red color thing is a district, so they are sharing border. Okay, and in each district there will be one urban center, and that in urban center maximum one local area bank will be set up. For this one local area bank, for this one local area bank, for this one local area bank. Okay, so like that, maximum 3 can open branches in maximum 3 districts sharing border with each other. Only one urban center per district allowed, and remaining branches need to be opened in rural areas of that district. Okay, here this is a urban center. Remaining and all whatever rural areas are there, they can open how many branches they want into that district. Okay, then regional rural bank, who's the ultimate regulator? RBI. But who's the immediate regulator? NABARD. NABARD, I told you what is NABARD? National Bank for Agriculture and Rural Development. Okay, that is the immediate regulator. Ultimate regulator is RBI. We'll study about this in the further thing. Then local area bank, they are non-scheduled banks. So while CRR and SLR and PSL norms will apply, but every norm may be different, which is decided by RBI. Okay, all these examples are no need to remember. Some amendment happened in 2015. This regional rural bank in 1976, which was you have to remember this date. Okay, so shareholding was union 50%, state 15%, sponsor bank 35%. The shareholding got modified. Like the union, state, and sponsor bank was made 51%, and it allowed private sectors to come in, so that more capital will be formed. Okay, RRB can issue new and fresh shares in the market to acquire more capital by private investors. So this was the amendment. Now, regional rural bank is for financial inclusion. No, all this is for financial inclusion. Now, how will they get the money from? From where will they get the money? You see the village mentality, village people mentality. Villagers deposit money in commercial banks for better interests, right? They won't deposit money in this regional rural bank. So how will they get money? Regional rural banks. So regional rural banks are more dependent on NABARD and sponsor banks. These two people will give money to regional rural banks. Okay. Then villagers take the loans from regional rural banks because they are cheap, and they don't return it also promptly, as the government will provide loan relief. Okay, all that farmer loan and relief and all that happens. No, it happens due to this. So these are all the problems of regional rural banks. Okay, then comes small finance bank or payment banks. Small finance bank and payment bank, not all payment bank. Okay, they were recommended on the basis of Nachiket More Committee in 2013-14. It was brought about for financial inclusion and competition and innovation among players. Okay, we'll see the individual features of this small finance bank. For example, Capital Small Finance Bank in Punjab. What is this? It was a local area bank. Okay, it upgraded its license to become small finance bank after acquiring minimum capital. Okay, this is just example, no need to remember. Then eligibility during what is the eligibility to become small finance bank? Any resident Indian, local area bank or NBFC or microfinance institute with an experience of 10 years in banking or finance and having a minimum capital of 100 crore can apply for small finance bank. Okay. Then where will it operate? Area of operation of small finance banks. That will be recommended by RBI committee. He told that it will specifically be opened in Northeast and Central India, where universal bank ka penetration is poor. Okay. Then CRR, SLR, repo and all that, are they permitted? Yeah, they are permitted, same as Indian private banks. Then rural penetration, they must have 25% of the branches in unbanked rural areas. What are the target customers of small finance banks? Unserved or underserved farmers, micro small industries. Okay, these are the target customers. What happened? Now, can they accept deposits? Yes, without any restrictions. What about debit cards? Can they give debit cards? Yes. Credit cards? Yes. Loans 75% NPSL, same as the RRB 75%, and 50% of the loan portfolios should be of rupees 25 lakhs or less. Okay, then what is the future growth? After 5 years, they can apply for universal commercial bank, but if RBI is satisfied in this case, it is RBI's discretion. If they're performing well, they'll get upgraded. Okay, then we will see payment banks. What is this payment banks? Like presently there are 6, like Airtel, Paytm, Jio, NSDL, India Post, Fina, and all that. All this is not important. What is the eligibility? Any resident Indian, NBFC, prepaid payment instrument wallet, okay, like that, Paytm, PhonePe, and all that. Mobile telephone companies, supermarket chains, cooperatives, companies controlled by resident Indians. Okay, if they have minimum 100 crore capital, they can apply for payment banks. What is the area? They can open anywhere. No restrictions for them. Are CRR, SLR applicable for them? They are applicable, same as Indian private banks, but some special terms and conditions are there for SLR. Then rural penetration. No need to open branches, but 25% of the access points must be available in rural areas like the Kirana stores and all that. Okay, then target consumers. They promote small saving remittance from migrant laborers. Their target is migrant laborers, low income households, and unorganized sector people and small businesses. Okay. Can they accept deposits? This is important. They can't accept NRI deposits. Think of Paytm. They cannot accept NRI deposits, okay? And they cannot accept fixed deposits. They can accept only demand deposits. Okay, and max balance of 1 lakh, which was increased to 2 lakhs in 2021. So maximum deposit which they can take, these Paytm and all, is 2 lakh. And that only demand deposit, that is. Demand deposit means whenever you want, you can get back the money. Okay, since they can accept demand deposits, they can give debit cards. Can they give credit cards? No, because they can't give loan. I told you that Paytm example, no, before. They can't give loan. Payment banks cannot give loans. Then here again cannot loan, so there is no PSL applicable to them. And they are required to invest all the whatever deposits they take, no, demand deposits. They are supposed to invest in government securities, treasury bills, scheduled commercial banks, and all that. All this I will tell in the next lecture, or maybe in the next to next lecture. Then what is the growth after 5 years? If this payment bank can become small finance bank, that is into this one, if RBI is satisfied. Okay, and Basel norms, they are applicable to both small finance banks and payment banks. Both small finance bank and payment bank can sell mutual funds, pension, insurance policy. You can see, all this in Paytm, that mutual fund and all, pension and all is there, features, right? But all this they can do only with the approval of the respective regulators. Like for mutual fund, SEBI has to be the regulator, IRDAI for pension, insurance, PFRDA for pension. What is the full form? IRDAI, Insurance Regulatory and Development Authority of India, Pension Fund Regulatory Development Authority of India. Okay. Now I told you, this Paytm payment bank accepts fixed deposits, but it is acting simply as an agent to open your fixed deposits in private sector commercial bank, that is IndusInd Bank. I already told you this one. It is simply acting as an agent. Fixed deposit is accepting. Okay, here only demand deposits is allowed. So all this is permitted because it is an agent here. Then India Post Payment Bank. This is also a type of payment bank. If it is a payment bank, then RBI has to give license under the Banking Regulation Act. Okay, it was opened in 2018. 100% government owned. It comes under the Department Post of Ministry of Communication. It is a public limited company, so it has to be registered under the Companies Act. Okay, under this, no, there are certain bank account types like Safal, Sugam, Saral. They can ask this in MCQ. What is Safal, Sugam, Saral related to? It is related with India Post Payment Bank. Then we can open zero balance account here. Even minors can open account. Minors means if they are more than 10 years or old, then they can open an account here. Then 2019 May, the India Post Payment Banks wanted to convert to small finance bank so that it can offer loans also. But according to RBI guidelines, you need 5 years experience before upgrading. So they still didn't get license for upgrading to small finance bank. No need to beat around that. So let's proceed forward. 2021, Niti Aayog proposed that to set up a full stack digital bank called Neobank. What is the benefit? What is the benefit of this? Financial inclusion of rural areas. Now, this full stack digital bank will be set up under the Banking Regulation Act. It won't have any physical branches. Okay, it will use internet for delivering banking services. So typically, a bank will have office, no physical branch at a particular address. This one doesn't have any physical branch. Okay, everything is done using internet banking services, delivering the banking service. Then, but RBI did not open this, did not give permission to open this kind of bank because it felt that the existing banks are enough for financial inclusion and all that. No need these fancy type of banks. Okay. Then cooperative banks. Cooperative bank, before let's see the difference between commercial bank and cooperative bank. Commercial bank, this Banking Regulation Act is applicable since 1949, whereas cooperative bank, it is applicable since 1966 because 1966 mein green revolution hua tha. So cooperative boom happened in the agricultural sector. So that's why Banking Regulation Act started applying from 1966. Then regulator, who's the regulator for commercial banks? RBI. Under cooperative bank, who's the regulator? Two people are there. If it is multi-state cooperative bank or urban cooperative bank, it is comes under the RBI. RBI is the supervisor. Okay, whereas all other types of cooperative banks, okay, they'll come under the dual supervision of whom? RBI and state government registrar for cooperative society. RBI and state government registrar for cooperative society. Make sure to write these down on a piece of paper. Okay, otherwise you'll forget. All this is important information. They can ask in MCQ. Then CRR, SLR and Basel norms, they are applicable for commercial bank. Here also they are applicable, but RBI can prescribe different norms. Repo and MSF, they are eligible. They are also eligible, but only a selected category of cooperative banks. What about PSL? Yeah, 40 to 75% they have to give. Then here only urban cooperative bank has to give PSL. Then who can borrow? Anyone can borrow. Here first preference is given to its members of the cooperative society. Voting power, it is based on shareholding of like a commercial company. Here one member, one vote cooperative society may, irrespective of how much capital contributed by each member. Then profit motive, commercial banks operate on profit motive, whereas cooperative banks, they try to help the community. Presence, they are all over India, commercial banks, whereas cooperative banks are mainly in Gujarat, Maharashtra, Andhra, Tamil Nadu and all that. But there are some challenges in cooperative banks, like the politicization of that cooperative bank happens. Casteism is there, poor recovery of loans, scams is there, money laundering is there. So all these are problems. Okay. So broadly, cooperative banks is classified into two types: urban cooperative banks and rural cooperative banks. Urban cooperative banks there are further division: single state urban cooperative bank, multi-state urban cooperative bank, or it can also be told as scheduled urban cooperative bank or non-scheduled urban cooperative bank. Under rural, there are like three types of cooperative banks: state cooperative bank, under that district central cooperative bank, okay, state district, and under that primary agriculture credit society. Okay, these three entities, state cooperative bank, district central cooperative bank, primary agriculture credit society, these provide short-term loans. These three. Apart from that, there are like other entities which provide long-term loans. For example, land banks, then cooperative agriculture and rural development banks. They provide long-term loans under the rural cooperative banks. Okay, what is this land banks is for? Land bank is for making the land fertile. They'll give funds for that. long-term funds for making land fertile. And this Cooperative Agriculture Rural Development Bank, they give money for irrigation facilities. Okay. Now under these three entities, state, district and primary agricultural credit societies, this PACS, primary agricultural credit societies, it is not considered as a bank. So RBI doesn't regulate them. So who regulates them? State registrar regulates them. State registrar, remember this, PACS. Okay, see this pyramid. In this pyramid, PACS is written here. DCCB is District Central Cooperative Bank, and SSCB is State Cooperative Bank. And above that comes NABARD. NABARD is the immediate supervisor of all these cooperative banks. But ultimate regulator is whom? RBI. Okay, what about SLR norms? Are they applicable on them? PACS may, it is not applicable, okay? But PACS and DCCB, it is not applicable, whereas State Cooperative Bank, SLR norms are applicable. And whatever surplus funds is there with them, with the State Cooperative Bank, that will be parked in the state bonds. Whatever state government will release, security bonds, securities, government securities, they will invest in that surplus funds. And they will get money from RBI, NABARD. Okay, NABARD is acting like a refinance agency here. Refinance means it will give money to SSCB, SSCB will give money to DCCB, DCCB will give money to PACS. It goes like this. They can't give directly money to PACS or the cooperative society. So this type of mechanism is called refinance. Okay. Then 2018 में क्या हुआ? RBI allowed them to voluntarily upgrade to small financial bank. This urban cooperative bank is there. RBI allowed them to upgrade to small finance bank. Now cooperative bank, the day-to-day supervision is conducted by NABARD and ultimate regulator is RBI. I already told you this. Right, okay. Then Banking Regulation Act, in 1949, it came out. It got amended in 2020. Why it got amended? To protect the depositors, prevent cooperative bank from falling into fraudulent activities. There are so many problems, all this politicization, casteism, poor recovery of loans. So in order to overcome all that, they amended this Banking Regulation Act. So what was the amendment here? See, they just changed the regulator, that's all. Commercial bank, who was the regulator before this amendment? RBI. After also it is RBI. What about the single state rural cooperative bank? Okay, single state. Think of your state, Rajasthan. Okay, in that there is a rural cooperative bank. Now, before, who was the regulator of this rural cooperative bank? It was under the both RBI and state government. It was dual regulation. Now what they did? It's the same thing, RBI and state government. Okay, no change in this. Now let's say a single state or urban. Now this is a rural cooperative bank. Let's say in your state there is an urban cooperative bank. Okay, this urban cooperative bank is governed under the State Government Cooperative Societies Act. Okay, before the regulation was RBI and state government. Okay, there was dual regulation, but now only RBI only. In case of urban, it is RBI only. In case of rural, it is RBI and state. You have to remember this. Okay, it's very important. So many MCQs have, even the prelims question has come for this. Then cooperative multi-state cooperative societies for multi-state, like for 2 or more states if it is there, let's say Rajasthan and Haryana, Punjab or something like that. Then this is governed under the Multi-State Cooperative Societies Act. Okay, who before this amendment, RBI and Union Government was a regulator. After that, it was only RBI. Next, this PACS. Before state government, after also state government. State government is registrar. See, state government's registrar for cooperative societies. That is the regulator. For union government over here, it means the agro ministry's registrar multi-state cooperative societies. Okay, all this you have to remember. Okay, just write it on a piece of paper. Scribble it. Okay, then non-banks. Now what we finish, all this formal. What are we studying? We are studying financial intermediaries. Under that formal we are studying. We finished banks. All this we finished. Now we will study about non-banks. All this. Okay. Non-banks. What was the need to bring non-banks? Why do we need this? See, post nationalization of these banks. When did nationalization happen? 1969 May or 1980 May? after this nationalization, no, there were some problems like investors couldn't take big loans from banks. Public sector banks did not give big loans. Government didn't allow them. Okay, then and also could not gain enough capital from shares. Okay, these investors could not get enough capital from issuing shares also. So what was the solution? Non-banks. Okay, now there are different types of non-banks. One such example is DFI, Development Financial Institutions. We'll see what is this DFI. DFIs, they give medium to long-term loans to industries. They arrange foreign capital and they do underwriting. What is underwriting? Underwriting is like a person from the bank. Let's say you apply for a loan. Okay, he will check whether you are eligible, you can pay back the loan, whether you have that capacity, whether you have that credit, whether you have collateral. He will check all this, and then all this process of checking is called as underwriting. Okay, then only he will approve that, okay, this person is eligible for the loan. Okay, that is called underwriting. Then do not accept deposits from ordinary people. Okay, DFIs don't accept deposits from ordinary people. How do they mobilize money? By foreign capital or through issuing bond shares and all that. They arrange money. Okay, now before, there were three types of financial intermediaries: bank, NBFCs and DFIs. Okay, under DFIs there was ICICI, IDBI, IFCI. Okay, IDBI का full form क्या है? Industrial Development Bank of India. IFCI का full form Industrial Financial Corporation of India. Okay, and ICICI full form Industrial Credit and Investment Corporation of India Limited. Okay, so there were three types of financial intermediaries. After 1998, that banking sector reforms number 2, which was given by Narasimham Committee, 1998 mein, it got categorized into two types: NBFCs and banks. Okay, this ICICI and IDBI became banks. Okay, and IFCI became NBFC. Okay, now this one, all this, whatever is there here, you don't have to remember the full forms. You just have to remember the timelines, because they'll ask chronology. Okay, so first one we'll see 1948 mein, is IFCI, Industrial Finance Corporation of India. It was owned by Finance Ministry's Department of Financial Services. All this no need to remember, just remember the date. IFCI 1948. 1955 mein, NSIC, National Small Industries Corporation, under the Ministry of Micro, Small and Medium Enterprises. Okay, then 1955 ICICI, Industrial Credit and Investment Corporation of India, was set up by Government of India, World Bank also. Later it became a private sector bank. Okay, 1964 Industrial Development Bank of India, IDBI Act 2004 transformed public sector bank, then transformed into a public sector bank. Then 2018 government sold its majority into to LIC. Then 2006 में India Infrastructure Finance Company Limited, IIFCL, owned by Finance Ministry's Department of Financial Services. These both are same department, IIFCL and IFCI, Department of Financial Services, Department of Financial Services. Then this one, National Bank for Financing Infrastructure and Development. This is an outfield. This is the fifth AIFI, All India Financial Intermediaries, which will come next year. This is the fifth one. Okay, here there are 4. This is the fifth one. It was established in 2021. Okay, you just have to remember the timelines. Next we'll go. This is the second type of non-bank, All India Financial Institutions. They can accept loans from RBI, government, World Bank, or they can issue, they can get money by issuing bonds. Okay. They give this money, this whatever loans they have got, they give it to banks like SBI, Axis and all. These banks further give loans to others. Okay, then whatever loans are there, if they get here, they also give it to NBFCs like Muthoot and microfinance institutions. Then again, they give the loans to big companies like big projects of the companies like Tata and Birla, worth of 500 crores or more. Okay. Next, now we are studying about all India financial intermediaries. Now there are actually 4 types of all India financial intermediaries. We'll see one by one. The over here, no, the time is this date is important. Year is important. Chronology. Okay, EXIM first is EXIM. EXIM means Export Import Bank of India, full form. Who's the shareholding? Majorly held, like entirely is held by Government of India. It promotes cross-border trade and investment, helps in importers and exports with loans and foreign currency. Okay. Then NABARD. This came in July 1982. This is January 1982. Okay, same year. Then this is full form is National Bank for Agriculture and Rural Development. Previously, RBI had minor stakes in this in NABARD, but in 2018, 100% government owned it became. Then who's the regulator here? NABARD acts as a regulator for cooperative banks. Okay, cooperative banks and regional rural banks. It also acts like a indirect refinance. I don't know refinance. It is not giving directly. It is giving to the state and then to the district, then to the PACS. So it's acting like an indirect refinance to farmers, artisans, and also operates this Rural Infrastructure Development Fund, RIFT. So what is this RIFT? It gives this fund. No, it is used to make irrigation infrastructure, roads and villages and all that. So where do this fund gets money from? They get money from if the banks don't fulfill the PSL quota. Okay, so if they don't fulfill PSL quota, some penalty will be imposed on them. No, so from that penalty, whatever money is accumulated, it will be deposited in this RIDF. And with this RIDF fund, they will make all this roads and irrigation infrastructure and all that. Okay, then National Housing Bank 1988 में खुला था. National Housing Bank, it's called. All this, no, EXIM, NABARD, SIDBI and all that, NHB, they were enacted by an act of the parliament. Then original boss is RBI 100%, but in 2019 RBI sold 100% to the government. So now it is a government entity. See, everything is government till now. Government. Okay, then what do? They give finance to banks and NBFCs for housing projects. They also release an index called Residex to monitor the residential real estate prices. Then SIDBI came in 1990, Small Industries Development Bank of India. Originally 100% owned by IDBI. Later on, they sold the shares to SBI and LIC. So again, these are government entities, so it again government owned. Then they operate the Credit Guarantee Fund, Small Enterprises Development Fund. Okay, different funds. Credit Guarantee Fund and Small Enterprise Development Fund. Then they operate this Udyamimitra.in for loans to small entrepreneurs via schemes like Mudra, Stand Up India and all that. Okay. Then are Basel norms applicable on them? On all this EXIM and all that? NABARD, AIFMA, are they applicable? They are applicable, but RBI can prescribe different slabs on them. SIDBI, no. SIDBI also is acting like an indirect finance. Refinancing, it's called, SIDBI can give money to Mudra and BFC, and these people can give money to banks, and the banks can give money to MSMEs. Or SIDBI can give money directly to banks, and banks can give money to MSMEs. So it is acting like a refinance. Indirectly, it is giving loans. Okay, then fifth AIFI, I told you, here, this one, 2021 May it was formed using this NAPFID bill. This is a fifth AIFI. Full form is National Bank for Financing, Infrastructure and Development, to set up under the Act of Parliament. What is the chairman? KV Kamath, headquarters in Mumbai, regulators RBI. It was made with the capital of 20,000 crore. It will get funding from RBI, government, World Bank, financial institutions, and it will also issue bonds also. So what is the objective? It will give loans worth 5 lakh crore in 3 years to help national infrastructure pipeline. And this is a very important project which will develop airports, ships, ports and all that, roads. So much capital is being invested into this national infrastructure pipeline. So it will help in developing that. Okay, so that completes AIFI. What we are studying? We're studying non-banks, no? So the third type of non-banks is primary dealers. Okay, in financial market there are two types: money market and capital market. Money market is for short term. Short term means less than 1 year. capital market is for long term, means more than 1 year. Money market, they are divided into two types: primary market, secondary market. Similarly, capital market also primary market, secondary market. These primary dealers, what we're studying, they deal in the primary market. Okay, what do they do here? Primary dealers, they go to the primary market. In this case, it is the e-Kuber platform of the RBI. Okay, they buy fresh government securities over here and they sell it in the secondary market. Secondary market means stock market. Okay, they buy fresh government securities here and sell it here, and they make profit here. Okay, like that, there are 20 licensed, 20 such primary dealers which are licensed by RBI. 14 of them are banks. Okay, all this is not necessary to remember. I'm just telling you extra information. Then retailers like us, you and me, we can also buy government security directly from RBI using in this portal. But we have to open this account called Retail Direct Gilt account. Okay, all this will come in the share market chapter. Further, I will tell you. Then fourth type of non-bank is NBFC. NBFC means, for example, Manappuram Gold Loan, Bajaj Finserv, and all that. So what is the difference between commercial bank and NBFC? Commercial bank registration, Banking Regulation Act. These people, it is a company, so it has to be registered under the Companies Act. Supervision of commercial bank is done under the RBI. This supervision of NBFC depends on what type of NBFC it is. If it is a mutual fund NBFC, then it is regulated by SEBI. If it is insurance NBFC, it is regulated by IRDAI. IRDAI is Insurance Regulatory Development Authority of India. Okay, what is the entry capital needed here? 500 crore. No, if you want license to become commercial bank, you need 500 crore and 10 years experience. So here it is 500 crore. What about here? The different norms depends on the organization. Then numbers, there are 13 public sector banks. All these numbers are not needed. Okay, just I will read it out. There are 13 public sector banks, 56 regional rural banks, 39 private sector banks, 44 foreign banks. Okay, how many NBFCs are there? Total 10,000 NBFCs are there. 108 are deposit taking, remaining are non-deposit taking. All these figures are not important. Then can they accept deposits? They can accept time deposits, commercial banks, and demand deposits. They are also known as checkable deposits. See, we got to know new term, checkable deposits. Then payment banks, they can't accept time deposits. Okay, but for example, fixed deposits they cannot accept. I already discussed this. Then their deposits are insured in the DICGC. What is DICGC? Full form is Deposit Insurance Credit Guarantee Corporation. Okay, under this what happens? Let's say a bank is there, depositors put some money in that. Okay, the bank, let's say it defaults. Okay, bank run happens, so it is unable to give the money back to depositors. So what will depositors do? They can't sit and cry here. So RBI guarantees that according to this act, 5 lakh will be given as insurance to them if something like this happens, some crisis happens like this. Then whatever deposits they have, 5 lakhs will be guarantee given to them. It is insured. Let's say they have deposited 10 lakh. Okay, and suppose bank is not able to give these depositors their money, then according to DICGC Act, they will get only 5 lakhs. They won't get 10 lakhs. It's up to 5 lakhs only. Okay, I hope you understood that. So they are insured. Then can they issue checkbook, credit card, debit card? Yeah, they can issue. Commercial bank, no. What about prudential norms like CRR, SLR? They are applicable. Basel norms, they are applicable. Investment, they can keep depositors' money in RBI approved securities, but can't invest in share market. They can't invest in share market. Commercial banks. Okay, then loan interest rate, they are decided by RBI methodology. Like there are different methodologies like BPL, MCLR. All this I'll discuss next lecture. Okay, loan interest rate is decided by RBI methodology. Then loan recovery powers under the SARFAESI Act. This also I'll discuss later. Just remember the SARFAESI Act is for loan recovery. In this, all that property and all can be taken from that bank or whoever is the defaulter. Then consumer complaints. Consumer complaints may RBI appoints an ombudsman, okay, or a bank appoints an internal ombudsman. I told you about this ombudsman. It is a government official who hears complaints made by the ordinary people. This name came from Sweden. Yeah, that is how commercial bank work. Now let's see NBFC how they work. The Companies Act I already told you. depends, supervision depends on the type of NBFC, entry capital depends on organization, all these numbers. Okay, deposits, NBFC, only NBFC deposit taking can accept deposits, and they can accept only time deposits, okay, not demand deposits. So you can remember like this: payment banks, okay, for example like Paytm, cannot accept time deposits, but they can accept demand deposits. How much? Up to 2 lakh. Whereas NBFCs, okay, that is deposit taking, they can accept only time deposits but not demand deposits. Okay, and these deposits, no, time deposits, they are not insured under this DICGC Act. Okay, what about checkbook, credit card, debit card? Can't they issue? They can't issue checkbook and credit card, debit card and all that. But what about this? There's an exception. Bajaj Finserv is giving credit card. No. So Bajaj Finserv is acting like an agent. Here also it is acting like some agent for some external bank. This bank is actually giving this credit card. But this Bajaj Finserv is serving as an agent to give this credit card. That's all. Then prudential norms. Here, no, for NBFC deposit taking, only SLR is applicable. CRR is not applicable to any type of NBFC. But they can prescribe different slabs for this or norms. Basel norms, they are applicable for deposit taking NBFCs, and they're applicable on NBFCs which are non-deposit taking but are systematically important with assets over 500 crore. If they have assets over 500 crore, then they have to comply with the Basel norms. Okay, then here also RBI can prescribe different slabs. What about investment? Can invest clients' money in share market. Here they couldn't invest, commercial bank, whereas NBFCs can invest in share market, mutual funds, insurance companies and all. And lower interest rates, it varies, depends on the nature and business. Recovery, housing finance companies have SARFAESI powers. That only whatever collateral is there, no, they can take that asset. Then all types of NBFCs don't have it. Okay, housing finance companies have this power, but not all types of NBFCs don't have this power. Consumer complaints, RBI has separate ombudsman for NBFCs. Okay, first time it was ombudsman was appointed for NBFC deposit taking. Okay, then NBFC can be classified into two types based on deposit taking or non-deposit taking, or who's the regulator. If the RBI is a regulator, then NBFC is regulated by RBI, NBFC is regulated by SEBI, NBFC regulated by PFRDA. Like that, separate classifications can be made. Let's see one by one. NBFC is regulated by RBI. Investment and credit company, they mainly help buying assets and machinery like tractor, bulldozer and all that. All these examples are not important. Okay, just read them 2 to 3 times, like watch this video 2 to 3 times, you'll get to know about this. Then consumer durable loan finance, or buy now pay later, helps buying TV, fridge, mobile, AC. Buy now pay later, BNPL, buy now pay later, or nothing but equated monthly installments model. Okay, no need more information on this, just remember that this is a type of NBFC regulated by RBI. Okay, then core investment company, they can ask you, they can give you these things in the option, and they can ask you how many of them are regulated by RBI, how many of them are regulated by SEBI. So that's why I'm just telling you all this. You don't have to know the details about it, you just have to know that it is regulated by RBI. Core investment company, they do long-term investment in companies like Tata Capital, Reliance Capital, ILFS. This ILFS, no, some controversy happened, and so they couldn't pay interest to the lenders. This will come later in that NPA chapter. No need to discuss here. Then infrastructure finance company, infrastructure debt company, internal difference not important. Okay, basically they give loans to infrastructure like highway, airports and all that. Okay, on examples not important. Asset reconstruction company, they buy bad loans from banks and other NBFCs and try to salvage value from underlying assets. Okay, then factoring companies. What is factoring? For example, this is me. Okay, this is me, this is you. Let's say you want to buy a painting from me. You ask me to draw a painting of you and I sell that painting to you. But you don't give me the money immediately. You tell me that after 2 months I'll give you the money. Okay, so what I will do, I need some money right now, no? I need working capital. I need to buy paint brushes, paint and drawing board and all that. So I don't have money right now. What I'll do is I'll appoint a factor. Okay, this factor will give me money. Okay, he will not give me full money. He will just give me 80% of that money which you owe me. Okay, and this factor will collect the money from you after 2 months. 2 months के बाद he will collect money from you. Okay, and after that 2 months, he just gave me 80% or now. What about the remaining amount? After 2 months, the remaining amount he will deduct his fee, whatever commission he will take, he will deduct that fee and he will give me the remaining amount. So this entire process is known as factoring. Okay, now there is a condition which will come here. Now suppose after 2 months you fail to give this money to the factor. Okay, so what the factor will do, he can ask me the money. Okay, because you are not giving the money, he will start asking me the money. Okay, or he can see that, okay, your banking history is good and you can give this money later also, so he'll give you some relaxation, and he's getting this fee also, no, commission fee, if he gets this money from you. So yeah, so there are two types like this. If relaxation he can give, or he can ask me the money. So there are different types of factoring process. This is called recourse and this is called non-recourse. Okay, so this is how factoring works. I hope you understood this. So there are different factoring companies. They lend short-term money. So here it's happening, no? Factor gave me some money, 80% of the money. So they lend short-term money to clients against his invoices or accounts receivable. Example, IFCI factories, Siemens factoring. Okay. Now gold loan companies, this is also regulated by RBI. Muthoot Gold Loan, Manappuram Gold Loan, all that. RBI decides the loan to value ratio. What is loan to value ratio? For example, this is the gold bar. Okay, it is worth 5 lakh. When you purchased it, it is worth 5 lakh. Now you go to a bank, okay, or this whatever this Manappuram Gold NBFC. This is not bank, this is NBFC, you think. Manappuram Gold Loan, Gold NBFC. So RBI will fix a loan to value ratio. If you take this gold bar and give it to this NBFC, how much money can they give you the loan? They can't give you 5 lakh loan. They'll give you depending on the ratio, loan to value ratio. For example, this is the loan which you want. This is the value. Value is how much? 5 lakh. Okay, this 0.8 is fixed by RBI. This is the loan to value ratio. It keeps on varying. It is a qualitative tool. We'll study about this in the next chapter. Okay, so how much loan you will get? 0.8 into 5, that is 4 lakh. So if you give this gold bar to the NBFC, he will give you just 4 lakh to you, not the entire 5 lakh. So that is loan to value ratio. Then gold companies, okay, gold loan companies are regulated by RBI. Then home loan companies like DHFL, Muthoot Finance, Muthoot Housing Finance, all the housing finance companies are regulated by RBI since 2019. But before 2019, National Housing Bank was regulating them. Okay, all this is very old. Some MCQ was asked. Then microfinance institutions, 2010, RBI appointed this YH Malekam committee. Okay, this committee gave recommendation that RBI should create a new NBFC categorization called microfinance institutions. They will give small loans to poor without collateral and flexible EMI. All this Bandhan Bank, Disha Bank, SKS, Cashpur and all that. Examples not needed. Who regulates the microfinance institutions? RBI. Along with Ministry of Corporate Affairs. This is important, okay? RBI plus Ministry of Corporate Affairs. Okay, who can borrow from microfinance institutions? Households whose annual income is less than 1.25 lakh in the rural areas and less than 2 lakhs in the urban areas. Okay, how much can one person can borrow? Not more than 1.25 lakhs. Okay. Then Mudra. Mudra was created in 2015. It is a non-deposit taking NBFC owned by SIDBI. It gives indirect loans to micro enterprises through PM Mudra Yojana. Okay. Then money changers, authorized dealers for foreign currency. They help the clients buy or sell foreign currencies, that is rupee to dollars and all conversions they will do. And they also have to obtain license from RBI under the FEMA. FEMA is Foreign Exchange Management Act. Then both banks and NBFCs can get license from RBI. Then residuary, whatever, any NBFC is not regulated under any regulatory any regulator, that is SEBI, IRDA or PFRDA, will fall under the RBI's purview. Okay, so these are all regulated by RBI. Just make a note of all of them. Okay, they can ask in MCQ how many of them are coming under the RBI regulation. Next, regulated by SEBI. Stockbroker. They help clients to buy shares and bonds depending on their instructions, like Motilal Oswal, Sherkan and all that, if you have heard of them. Then discount broker, Zerodha you would have heard, Grow and all that, keep coming on ad, no? They help the clients buy and sell share bonds through online mobile apps. Okay, they are known as discount brokers because their operational costs are lower and they do not keep large number of sales agents or physical offices. So that's why their operational cost is low. So therefore, discount brokers charge less commission than traditional stock brokers like Motilal Oswal and all. Then mutual funds. They pool the client's money, okay, and the mutual fund manager invests in the shares and bonds using its own discretion and expertise. And whatever profits comes from the dividends and all that, it will be given to the clients. Okay, then REITs and InvITs, they also pool and invest the money in real estate sector and infrastructure projects. Okay, this is also regulated by SEBI. Then investment banks. Investment banks is a term which is used in USA, and merchant banking companies used in UK. Both are same thing, just terminology is different. What do? They perform underwriting. Already told you what is underwriting. They do merger and acquisition, wealth management of rich people. Okay, for example, Kotak Mahindra, Citigroup, Bank of America, okay, SBI Capital. Then 2021 में SBI allowed payment banks to act as investment bankers. ठीक है, like even Paytm can act as investment bankers. They can do underwriting, merger and acquisition, wealth management of rich people and all. Then venture capital fund, they help startup companies arrange capital. Okay. Then market infrastructure institutions, they are divided into 3 subtypes. Stock exchanges, BSE, NSE, they help the buyer and seller connect with the secondary market. Secondary market means stock market. Okay. Then depositories, NSDL, CSDL, they help clients store shares, whatever shares you buy, shares, bonds and all, you can store it digitally. Okay, that is facilitated by market infrastructure institutions. Then clearing houses, central counterparties, what is this? They help settling the trade by transferring money to seller and transferring shares to buyer. Whatever money is there, it will get transferred to seller and shares will get transferred to the buyer. Okay, money and shares are getting transferred between buyer and seller. All this facilitated by market infrastructure institutions. Okay, regulated by SEBI. Next, NBFC regulated by others like IRDA. This is insurance Regulatory Development Authority. They regulate LIC, HDFC, Standard Life Insurance and all that. They also provide non-life insurance, that is general insurance. Okay, they act as policy aggregator. Web platforms like PolicyBazaar.com. What is policy aggregator? Like different companies are there. They give different life insurance and non-life insurance. So all these different life insurance and non-life insurance will be combined into one portal. So that portal is known as policy aggregator. Example of that is PolicyBazaar.com. In this PolicyBazaar.com, you get a lot of different brands of insurance companies, whatever they are offering. Then PFRDA, this Pension Fund Regulatory and Development Authority, it regulates all pension funds except EPFO. Except this, all the pension funds it regulates, and other statutory funds. EPFO, who regulates this? It is regulated by Central Board of Trustees. Okay, then Ministry of Corporate Affairs, Nidhi companies under them, mutual benefit club. Okay, only members can borrow from here. For example, South Madras Benefit Fund Limited, and all this Manapuram Group may have been Nidhi Limited and all that. Then microfinance companies. Okay, that is also regulated by. They are microfinance companies. Some regulation by RBI and some regulation done by Ministry of Corporate Affairs. We already studied that. Then State Registrar of Chit Funds. Chit funds are happening on a small level, but they are regulated by state government. It is a type of collective investment scheme where monthly contributions are made. Okay, borrowing by contributing members of chits. Okay, for this there are state laws to regulate this. Okay, then NBFC shadow banking. What is shadow banking? It is a set of activities or institutions that operate partially or fully outside the traditional commercial banking sector. Okay, it is outside the traditional banking sector, so it is not regulated by RBI. They mobilize the funds by borrowing from funds by banks or issuing commercial paper or by issuing bonds. Their assets are riskier because they can't honor their obligations to bond repayments. So that's why they're called as shadow banking. Examples of this is HFC, housing finance companies like DHFL, then LDMFs, liquid debt mutual funds. They invest clients' money into short-term debt instruments like treasury bill, commercial papers, and all. Then retail NBFCs like retail non-banking financial companies such as gold loan companies, asset finance companies. All these are shadow banking NBFCs. Now there is an NBFC which is not allowed in India called Islamic banking. In Islamic banking, no, they are prohibited from taking interest. Interest in their terminology is called riba. Okay, so how do the banks operate here? Islamic bank, they operate on ijara, murbaha, musharka. There's some different mechanisms. Okay, under this, what they do, depositors' money is invested in borrower's property or business. Okay, and whatever returns they get, no, they are shared in the form of rent or profit. They're not in the form of interest. They're in the form of rent or profit. However, RBI has prohibited this kind of banking in India. Okay. Then informal, we studied all that. No, we finished banks, non-banks. Where is that? Starting page. Here. Financial banks we finished, non-banks we finished. We studied all this. Okay, then no, informal financial intermediaries. Under informal financial intermediaries, they provide loans without formal application, but they require property, vehicle, or a home, or any crops or goods or gold as a collateral. Okay, and they charge very high compound interest, and they use muscle power for recovery. Okay, this is a data. For every 100 rupees borrowed by rural households, 33% are from the informal money lenders. Okay, and they don't fall under the RBI's purview. They're doing behind it. So, but state government has individual laws to regulate them. Like there is Bombay Money Lenders Act, okay, which will regulate all this informal financial intermediaries. Now, this is not important. This is like in medieval India, it will come. History, indigenous bankers are known as different names, like Shroff, Shikarpuri, and then Chetiyar, Marwari, then Iyer, Rastogi. All these are known as indigenous bankers. Then money lenders or brokers are known as Kabuli Patan, Quistwala, Arathia, Village Banya, Soni, Mahajan, Seth, pawn brokers, financial brokers, and all that. How do they mobilize money? These indigenous bankers, they mobilize money using hundi. This hundi came in 2021 prelims. What is hundi? It's a bill of exchange for mobilizing money via public. They also mobilize money using commercial bills, and they use their own savings money, okay, or it's some black money lenders. Okay, so we finished all of that. Now we will see blue book fast. We studied everything. We have to just see blue book once. Fast. I will just revise. So we studied all this history of banking. 1770 first Bank of India, Bank of Hindustan. Then 1809 में Bank of Bengal, Bank of Bombay, Bank of Madras. All these three were called presidency banks, BBM. Okay, they were combined, okay, to form Imperial Bank of India, which later in 1955 became SBI. Okay, 1965 Allahabad Bank. Then 1894 में I think Punjab National Bank, which is completely Indian owned. Lala Lajpat Rai gave the foundation to it, Punjab National Bank. Then 1921 में Imperial Bank of India. That these three banks, the BBM banks, they got merged and Imperial Bank was formed. 1955 Imperial Bank became SBI. 1969 and 1980 nationalization of banks happened. 1960 14, 1980 6. Okay, why was the nationalization happened? Because banks were doing nepotism, scams were happening, and they were not helping poor or farmers. Okay, then classification of banks, they are classified into commercial and cooperative banks. Okay, commercial banks, they operate on profit. They can be classified into scheduled commercial bank, non-scheduled commercial bank. Scheduled is that second schedule, whatever is there in the RBI Act, they have to fulfill that. Then they'll be called as scheduled bank. What are those two conditions? Paid up capital should be 5 lakh and they should have 10-year business experience or any in financial matters. And they should have minimum reserve requirements with the RBI as per the Reserve Bank of India. Okay, that is they should not harm the depositors. को harm नहीं चाहिए. Then non-scheduled bank, they carry out limited operations. For example, non-scheduled banks are not allowed to do foreign exchange and they have to maintain reserve requirements as per the Banking Regulations Act. Okay, here reserve requirements is as per RBI Act, here it's as per Banking Regulation Act. This you have to remember, okay, these differences. But may not be with the RBI. Whatever reserve requirements are there, they need not be held with the RBI. They should hold by themselves, non-scheduled bank. Already discussed all this. Then cooperative banks, they work on cooperative lines. Okay, they service to its members and the society can be further classified into urban cooperative bank and rural cooperative bank. Urban cooperative bank is located in urban area or semi-urban areas. UCBs are again classified into scheduled and non-scheduled categories, which can be further classified into single state and multi-state. Okay, single state urban cooperative bank and multi-state urban cooperative bank are registered under the cooperative societies, but single state urban cooperative bank are under the provisions of state government cooperative societies act. So this one, no, it is old. It got upgraded to RBI. Some amendment happened to Banking Regulation Act in 2020. I discussed this, where the regulation got changed. So for single state urban cooperative bank, the regulations is under the here it is given Register of Cooperative Societies of the state, but it is actually under the RBI. But it is provisions are mentioned in this act only, State Government Cooperative Societies Act. Okay. Then what about the multi-state urban cooperative bank? They are under the provisions of Multi-State Cooperative Societies Act, and they are regulated by Central Register Cooperative Society. Again, this is not this used to be, but now it is operated by RBI, regulated by RBI. If you want, I can go back and show you. Here, before we saw no urban cooperative bank, single state urban cooperative bank. Before it was RBI and state government. State government is State Government Register of Cooperative Society. Now it is only RBI. What about this multi-state cooperative? It is registered under the Multi-State Cooperative Societies Act. Okay, and now it is regulator is only RBI. So these two are the only changes made for urban and multi-state. Regulator is only RBI. Remaining all, it is the same. Okay, for single state rural cooperative bank, RBI and state government will do, and for PSA it's only state government. That state government means registrar. Okay, state government registrar for cooperative societies. Okay, then this is about urban cooperative bank. Now rural cooperative bank, they are primarily mandated to ensure flow of credit to agricultural sector. Okay, under rural cooperative bank there are two types, long term and short term. Long term mein we already saw no land banks. Okay, all these type of banks are long terms. Another here is state cooperative agriculture and rural development banks, primary cooperative agriculture and rural development banks. All these are for long term loans. Then short term mein state cooperative bank, district cooperative bank, primary agricultural credit societies, all these comes under short term. This state cooperative bank and district cooperative bank, they are under dual regulation, state government and RBI. Okay, they are set up under the State Cooperative Societies Act, regulated by the state and RBI. What about primary agricultural credit societies? They promote agriculture and they are not under the purview of Banking Regulation Act, so they are not regulated by RBI. Okay, the same thing is written here. These 2 points is just summarized. I just summarized it in this flow chart only. Then all rural cooperative banks supervised by NABARD. Okay, RBI delegated this function to NABARD, but ultimate regulator is RBI only. Okay. Okay, it is supervised by NABARD and this registrar of cooperative societies of the state. But that amendment act was there, no? That is amendment act is only for urban and multi-state. Okay. Then I already discussed this. Don't need to discuss this again. Then all cooperative banks raise money via public issues, private placements of equity or preference shares, as well as unsecured debentures with central banks nod. Again, no need. Public sector banks owned by central or state governments having more than 51% ownership with the government is known as public sector banks. Example, State Bank of India. Then private sector banks, they are owned by private individuals, for example, Axis Bank. Then foreign banks, they are established in India but owned by foreign entities. See, they're just giving one line, that's all. But I have discussed in detail, okay. And regional rural banks, they're established in 1975, provisions under the RRB Act 1976. Share capital of RRB subscribed by central government 50%, state government 15%, sponsored bank 35%. Already discussed all this. Then its authorized capital is 2000 crore. Authorized capital, I already told you, no. This, imagine this is a glass of water and it is filled till here. Whatever it is filled, it's called paid up capital, and whatever it is capable of getting filled, it is authorized capital. Authorized capital is how much? 2000 crore. Maximum possible shares it can issue, worth of 2000 crore. Then RRB need to provide 75% of this of it to priority sectors. Then under the supervision of NABARD. Local area banks, they are non-scheduled commercial banks which were established as per the Government of India scheme announced in 1986. They need to maintain CRR and SLR. They need to fulfill priority sector lending obligations. There are four local area banks in India. Okay, in the form of non-scheduled banks. One such example is Coastal Local Area Bank in Vijayawada, Andhra Pradesh. Then Small Finance Bank is that 2015 mein aaya tha. Okay, small finance banks are a type of financial institutions that provide financial services to unserved and unbanked area, basically financial inclusion. Recommended by Nachiket More Committee 2014. So no restrictions on the area of operations of small finance banks. They can access repo market, that is the RBI window, and they are required to extend 75% of the total credit to sectors eligible for classification as priority sectors. 75% they have to give for PSL, and 50% of their loan portfolio should be constituted up to 25 lakhs. Loans up to 25 lakhs. Then payment banks, again 2015 May. The payment bank is like any other bank but operating on a smaller scale without involving any credit risk. It is also recommended by Nachiket More Committee. Have to follow CRR and SLR obligations. They can access repo market. Okay. Minimum paid up capital should be 100 crore. Okay, then the banks will not be allowed to lend or issue credit cards, but they can issue debit cards because they can issue demand deposits up to 2 lakh. Okay, and these deposits are insured under the DICGC, Deposit Insurance Credit Guarantee Corporation. Then payment banks will accept only demand deposits up to 2 lakhs. Then no NRI deposits. This is important. No NRI deposits. Then Basel III norms are tight for this because small deposits monies are there, no? Small depositors company. So banks should not take more risk. That's why more Basel norms, more tighter Basel norms. That is the capital to risk weighted as risk ratio is there, no? Capital to risk weighted ratio. It is 15%. Actually, for commercial bank, it is some 9%. For them, it is higher to protect the small depositors. Then NABARD was established in 1982 under the provisions of National Bank of Agriculture and Rural Development Act 1981. Remember the year? 1982. Okay. NABARD provides credit for the promotion of agriculture, small-scale industries, cottage and village industries, handicrafts, other rural crafts, and other allied economic activities in rural areas. Then NABARD acts as a coordinator and supervisor in the operations of rural credit institutions like RRB, rural cooperative banks. Okay, but RBI is the ultimate regulator. NABARD is the immediate regulator of the cooperative banks. RBI is the ultimate regulator. This provides NABARD provides training and research facilities for banks and cooperatives. NABARD doesn't give direct finance; it gives refinance. I don't know refinancing. NABARD gives finance to state, and then state gives to district. District gives to PACS. Okay, that is refinancing. Then authorized capital of NABARD increased from 5,000 crore to 30,000 crore. The National Housing Bank supervises national housing. Okay, I didn't tell you this one, no? Where is that? This one. Before I think 2019, I think. Where is that? 2019. Before 2019, no? RBI used to regulate National Housing Bank, and okay, it was under the RBI. And this National Housing Bank used to regulate home loan for NBFCs, and okay, government did not regulate any of that. But after 2019, all the shares of the National Housing Bank, RBI sold them to government. So National Housing Bank comes under the government now, and all this home loans are there, no? Home loan NBFCs. RBI regulates them. Okay, this is the change which happened, which I forgot to tell. Okay, this National Housing Bank, it supervises national housing companies but regulated by RBI. We saw that now, just now. Then National Housing Bank was set up in 1980. Remember the year? Okay, under this act. Then to promote housing finance institutions, objective is that, and then it does not extend direct credit at individual level but provide refinancing facility. Again, refinancing is happening here. Then Exim Bank, it was established in 1982 under the Exports Import Bank of India 1981 to provide financial assistance to exports and importers. Exim banks also extend loans to overseas financial institutions. Okay, overseas means outside the country. Then regional development banks, sovereign governments, and other entities overseas, they also are eligible for this Exim Bank. Then they to enable buyers in those countries to import goods and services from India. Okay. Then they extend loans on its own and also at the order and with the support of the government of India. They provide both direct financial assistance and indirect. Here both is there, direct and indirect. Okay. Then SIDBI. SIDBI was established in 1990 under the provisions of SIDBI Act. SIDBI acts as the principal financial institution for promotion, financing, development of MSMEs and coordination of functions and institutions engaged in similar activities. SIDBI mainly acts as indirect finance assistance. Same refinance is happening here. SIDBI also. Okay, then Mudra Bank. Mudra is a micro full form is Micro Units Development and Refinance. Again, refinance is happening. Agency Limited. It is a financial institution set up by Government of India for the development of free finance micro unit enterprises. It's a subsidiary of SIDBI. The purpose of Mudra is to provide funding to the non-corporate informal sector, okay, for small business sectors such as small manufacturing units, artisans in rural areas and urban areas also, with financing requirements up to 10 lakhs. Up to 10 lakhs will give loan. Then Mudra would be responsible for refinancing last mile financiers such as micro financial institutions, NBFCs, cooperative societies, scheduled commercial banks. Mudra, there are three types of Mudra loans. Remember like this: SKT. S stands for Shishu, Kishore, Tarun. This is 50k up to 50k loan. This is 50k to 5 lakh. This is 5 lakh to 10 lakh. Tarun loans. Tarun is the highest loans. Okay, then non-performing assets. Okay, this I will discuss later in the next lecture. Non-performing assets. Till here we will complete. Okay. Now we will do MCQs. Where is our MCQ? Tell me, RBI regulates the commercial banks in matters of liquidity of assets, branch expansion, merger of banks, winding up of banks. Okay, pause the video and try to answer it. Answer is all of them. I can't highlight it. Okay, it is option D. I can't highlight it. Okay, option D is the right answer. Okay, it can do everything: liquidity of assets, branch expansion, merger of banks, winding up also. Okay, second question. In India, the central banks function as a lender of last resort. What does it mean? Lending to trade and industry bodies when they fail to borrow from other sources, providing liquidity to banks having temporary crisis, lending to government to finance budgetary deficits. What is the answer? Pause the video and answer. Answer is 2 only. Okay. They provide liquidity to banks having temporary crisis. All that repo rate and all that. Then next question, find the correct statements about payment banks. Mobile telephone companies and supermarket chains that are owned and controlled by residents are eligible to be promoters of payment banks. Payment banks can issue both credit cards and debit cards. Payment banks cannot undertake lending activities. How many of them are correct? Okay, the answer is 1 and 3. Okay, option B. Payment banks cannot issue credit cards and cannot issue credit cards. They can issue debit cards, but they cannot issue credit cards because they cannot give loan. Remember, Then what is the purpose of setting up small finance banks in India? To supply credit to small business units, to supply credit to small and marginal farmers, to encourage young entrepreneurs to set up business, particularly in rural areas. What is the answer? Pause and answer. Answer is 1 and 2 only. Okay, to supply credit to small business units and to supply credit to small and marginal farmers. This young entrepreneur encouragement and all is not the objective of that. Then which was the earliest event to take place? See, they're asking chronology here. Nationalization of insurance companies, nationalization of State Bank of India, enactment of Banking Regulation Act, introduction of 5-year plan. Which one was the earliest? Enactment of Banking Regulation Act. 1949 में आया था. Okay, then find correct about the India Post Payment Bank. It has been incorporated as a public limited company. It started its operation by establishing 2 pilot branches in Hyderabad and Varanasi. Okay, what is the answer here? Second one is wrong. Hyderabad, Varanasi is not correct. Some other branches. I don't remember which one. First one is right. It is a public limited company. So only one is right. Okay, next question. Consider the following events. The first democratically elected Communist Party government formed in the state of India. Then the India's largest bank, Imperial Bank of India, was renamed as State Bank of India. Then Air India was nationalized to become a national carrier. Then Goa became part of independent India. You have to arrange this in chronological wise. I told you, you have to remember the dates. So what is the answer? Answer is B. 1953 में Air India was nationalized. Then Imperial Bank became State Bank of India in 1955. Then one, which is first democratically elected Communist Party government, was formed in state of India, which is 1957. Then fourth one, now Goa became part of independent India in 1961. Okay, then find the correct statements about urban cooperative banks. They are supervised and regulated by local boards set up by the state governments. They can issue equity shares and preference shares. They were bought under the purview of Banking Regulation Act 1949 through an amendment in 1966. Pause and answer. We already saw this. First option, no, it is regulated by whom? If urban comes, it is regulated by RBI now. Okay, because of the Amendment Act which happened in 2020. So it is the first option is wrong. So if first option is wrong, by elimination only B is right. Okay, they can issue equity shares and preference shares. They were bought under the purview of Banking Regulation Act 1949 through an amendment of 1966. Okay, who grants direct credit assistance to rural households? Pause and answer. Again, we saw NABARD gives indirect finance, not direct finance. So answer is RRB and land development banks. Land development banks is for long term. Remember, it's for long term rural cooperative bank. Okay, so answer is B, 1 and 3. C, 1 and 3. Then it is a mistake here. It should be C. Then find correct statements. NHB, apex institution of housing finance in India, was set up wholly owned subsidiary of RBI. SIDBI was established as a wholly owned subsidiary of Industrial Development Bank of India. Pause and answer. Answer is both A and B. Okay, both are right. It was originally owned by RBI. This also was originally owned by IDBI, but later on they sold it to the government. Okay, then find the correct statements about NBFCs in India. They cannot engage in acquisitions of securities issued by government. They cannot accept demand deposits like savings account. What is the correct option? Answer is they can engage in acquisition of securities issued by the government. They cannot engage. They cannot engage in the acquisition of securities issued by the government. But option B is wrong. They cannot accept demand deposits like savings account. Option B is correct. Okay. Demand deposits they cannot accept. They can accept only time deposits. Then the main function of banking system is to pause and answer. Accept deposits and provide credit. Accept deposits and subsidies. Provide credit and subsidies. Accept deposits and give credit and subsidies. Main function is to accept deposits and provide credit. We find the correct statements about credit rating agencies, CRA in India. Okay, they are regulated by Reserve Bank of India. The rating agency, popularly known as ICRA, is a public limited company. Brickwork Ratings is an Indian credit rating agency. I didn't discuss all this, no? Let me discuss this. Okay, let me quickly discuss this credit information companies and credit rating agencies. Okay, so basically just giving some rating to the individual or companies, whether they can have the capacity to repay the loan or not. Okay, what is CIC? Credit information companies. They'll give this CIBIL score, okay? CIBIL score for individual people. Whereas credit rating agencies for companies. Okay, they are issued by certain companies, certain credit rating agencies like Standard and Poor's, Moody's, and all that. Okay, we'll see the difference between them two, of those two. What is CIC? Who is the regulator? RBI regulates them. Credit information companies, it's for the individual people. RBI regulates them. Whereas credit rating agencies, SEBI regulates them. Okay. What are the examples of CIC? CIBIL, TransUnion, CRIF, Highmark, and all these are examples. Okay, then credit rating agency ka example, Standard and Poor, Moody's, CRISIL, Fitch Ratings, all this you will see in news. Then Brickwork Ratings in India. Okay, SEBI ordered it to shut it down due to malpractice and all that. Okay, then CIC, they check the credit. What about the credit worthiness? They check the credit worthiness or loan repayment capacity of individual persons. CIC. Whereas CRA checks for companies, NBFCs, governments, local bodies, and non-profit organizations. They do not check it for individual persons, these credit rating agencies. And what about how is the rating given? In case of CIC, it is given in numerical score, like CIBIL score is given. It is the score range is from 300 to 900. Okay. If it is more, then more better you are. The borrower is better. He will give the loans on time. Then CRA may rating is given through alphabetical symbols like AAA, AA minus, and all that. Utility, if score is better, loan application will be passed more easily, and you'll have to pay lower interest rate. Same thing for this case also, CRA also. Okay, the same thing what that MCQ was being asked. Credit rating agency, they are regulated by Reserve Bank of India? No, they are regulated by SEBI. The rating agency, popularly known as ICRA, is a public limited company. Okay, we didn't study about this, but since we eliminated one, we came to the second option. Then Brickwork Ratings is an Indian credit rating agency. Okay, we saw here Brickwork rating is India. SEBI ordered to shut it down. So that is an Indian credit rating agency. So 2 and 3 is right. Okay. So we saw where is that question? Okay, here is that question. Next question is RBI acts as a banker's bank. What does this mean? Others banks retain their deposits with RBI. The RBI lends funds to commercial banks in times of need. RBI advises the commercial banks on monetary matters. What is the answer? Answer is all of them. 1, 2, and 3. Okay. Then last question. Find the correct statements in the terms of short-term credit delivery to agricultural sector. District central cooperative banks. Okay, they deliver more credit in comparison to scheduled commercial banks and regional rural banks. Okay, then second option is one of the most important functions of DCCB is to provide funds to PACS. How many of them are right? First option is wrong because they don't give more credit than scheduled commercial bank and regional rural banks. Okay, so only the second option is right. They saw that cooperative bank, district, NABARD gives to district, state, and state gives to district gives to PACS. So second option is right. Okay, so that completes the lecture.